What's going on, guys? I'm here with my son in my kitchen. We're just gonna go over some pairs for the week. It's 8 a.m. right now on Sunday. Just getting ready for the weekend. I'm gonna do some quick market analysis. So it's gonna be a little time lapse here, me just feeding through and working on my chart. And I'll come back and tell you guys what I think. Yo, what's good? It's now 1 p.m. coming from 8 a.m. I've done the dollar and euro USD. Now I'm gonna do GBPJPY. I was doing a couple of things and I met with a student for a 2-hour block with one of our market structure, high time frame analysis, key levels, so on and so forth. But I'll show you what I see on the charts in just a bit. Here comes another time lapse. Yo, what's going on? So I'm finally back here. I'm done with the outlooks for the dollar, euro USD, and GBPJPY. And I'm gonna just go through some time frames real quick from the monthly down to about 4 hour, 1 hour. So just to zoom through real quick, we have a bearish dollar for quite some time. Biden is coming to election around January 2021. And we see a bounce coming off of May. This is in the good spirits of the economy as we have vaccine rollout and just bettering the country in terms of like it opening back up and so on and so forth. So on the weekly, we see a very classic retail double bottom reaching up towards like 94.530. We just broke above 94.80 that I've touched on previously in the last video. You can check that out too from last week. But now we're reaching towards 54.350, 530, excuse me. And we haven't broken above that. We actually showed some rejection and we broke in the previous low of the weekly candle. If you go towards the day, if you were trading last week, you remember we had bullish action for the dollar for quite some time, reaching into the last couple of days, and it just took out the last 1, 2, 3, 4 days of gains. And now we have closed below this area right here on the day chart. And you can see we have this clean double top retail pattern as well with some work rejections here. Now I have this little triangle, and as I go down to the lower time frames, you'll see on a 4 hour time frame, I like to make my decisions in terms of what direction of the market I'm going to trade. So here on the dollar, I anticipate that we'll have some type of liquidity battle reaching for highs and lows. Now, just looking at structure here, we have respected these lows. So what I'm really anticipating is a break above 94.030 in the beginning of London to push price higher. Now, if price wants to reject, once it comes higher towards 94.530, that is a whole different discussion. But in terms of this breakout, I do see this happening. If not, it'll just happen to the downside and we'll play to 93.07 and then vice versa. And we'll see what happens at the reaction here. Now, I say reaction all the time because we don't want to predict in the market. We want to react to what's been happening. And I'm saying that out loud to myself too, because I can fall victim as well. So clearly a bullish approach right now to the dollar, as I know we have broken structure lows here in this interstructure here. But if you look closely, our lows haven't been met on this left-hand side here, right? We have this low that was created. Price is doing everything it wants to do in terms of breaking structure here. But as we're starting to make these lower highs and lower lows, this high looking left has been respected and not closed below. So this is why I'm leaning more towards the bullish side. But of course, we want to see reactions up in here, up in 94.030, and a break above this, a close above this will solidify my bullish idea. But if we get rejection, down to the downside we go, and we will take the inverse reaction to trade euro USD. So moving right along to euro USD, I won't go from month, week to day because they look very similar in terms of the dollar and euro USD. As a matter of fact, I'm gonna pull them side by side here. Oh, let me change the theme because lately I've been doing some color changes on my. Oh, hold on, let's see here. Save as. Yes. FX gray. All right, so let me just change this over here just so we have the same colors going on. All right, so there's the dollar on the left-hand side here. Let me make myself smaller. Let me just take my whole stuff out real quick just to show you this comparison. So here we have the dollar on the left-hand side on the 4-hour chart, and we have EURUSD on the 4-hour chart as well. Now, if you look at these lows set at, or this highs for EURUSD at September 23rd, you can see here as well on EURUSD, on the dollar, excuse me, looking on the right-hand side, here's that low versus that high. And follow my cursor on the right-hand side as I go through the left-hand side price action. You see as there's an inverse where price is impulsing upward on the dollar, price is impulsing downward on EURUSD. This is because of the strength of the dollar pulling EURUSD to the downside. And that's why we have such bearish price action, because the dollar has been bullish for a couple months now. finally showing signs of rejection, but we're still holding lows. So let's wait on it in terms of calling the tops and calling the bottoms, right? So let me just take off that inverse. So now that you guys know the dollar is inverse to EURUSD, it's positively correlated, of course, with major pairs that start with USD, with the base pair of USD. So for the quote pair, excuse me, actually really doesn't even matter, base quote. I'm pretty sure the base pair is the first one. I can never really get it right. I was confusing. Base pair, quote pair, Forex. Base pair is the, yeah, it's the first one. Anyway. So with that idea, with the dollar continuing to stay bullish, I want to see the same pennant as we have price action wise on the dollar on EURUSD to be broken either to the upside or the downside with closures above each range. Bullish being the break and close above 161.90 towards 161.1665, and vice versa. If we get that break below 5,700, we could take this even lower to claim new lows on the weekly that will go and combat these wicks that have been rejecting. And if we fall lower, it's in for a ride. And so on the dollar, if we start to break highs, this will happen on EURUSD. So let's be patient in what the rest of the week has, but there's a lot of potential in terms of good risk to reward setups. I will be very bullish if we, not very bullish, but I will definitely take buying opportunities above 161.900 if we get the close and the break, of course, and if we get the catching it. 35 pips is a little bit above my range. I like something around like 20, max 20 pips, but I'm taking trades in the session and leaving runners to see if we can catch it on all the upside opportunity. So here we have a target about 46 pips if we break above this range here. And let's say we have price action that clears these lows and maintains this structure here. You can have a nice 20 pip stop, and that's a 2.3 risk to reward on your bread right there. Now, let's say if we do break above this triangular pattern and we start to reject 161.90 and don't break above it, shorts are in play, right, with stops above this settle high, which is 16 pips, coming back down towards this range, and you can claim target 1, target 2, and target 3. So this will be ideal given with the dollar if we break above, I'm sorry, if we start to break below and we claim 93,800, we break here, we give that retest, back up here, and back up here, we can get those 80, 90 pips to the downside on EURUSD. So keep your eyes on that one. I know my colors are kind of wonky in terms of people viewing them, but for me, they're perfect because I don't like a lot of color. So yeah, that's what I think on EURUSD and the dollar. Being very patient, playing the ranges, playing the closure and the breaks of those ranges. Yeah. So last but not least, let's look at GBPJPY. And this has been on a crazy bullish trend, almost since I could stop. Sells are a no-go for me. 100% being that we've broken this previous week high. Now we've closed above it. Now we could play around the bounces at 156.50 for bullish tags to the upside. But until we start to reveal more structure in terms of what it wants to do, I'm definitely going to stay away from GBPJPY. This thing can be a beast. But let's say we do have good risk to reward entries coming into London. If we don't break 156.50, stops right here below the zone is huge. Never mind. 20 pips below this wick is, see, these are riskier entries. These are entries that could potentially turn around on you with no regard, you know? So I would definitely kind of wait for this low key. I mean, if you want to take these sells with a breaker structure down here to these lows, by all means, have at it. But 400 pips to the upside, bullish trend. How many back-to-back daily bullish candles? 1, 2, 3, 4, 5, 6, 7 daily bullish candles. A whole week of price action bullish. I wouldn't sell. That's just me. So yeah, real quick run through of what I see happening in the week. Of course, Monday through Friday, London sessions, 3 to 6 a.m. I'll be trading in the Discord. I have my son, so sometimes I'll have my mic on. I won't have my mic on, but I'll communicate that as well. And yeah, mind, body, soul. I'm out of here. Have a great week.